All right, it's Monday. We're going to go over Canada GDP and we're going to go over what's going on in Japan and how it's affecting our bond yields and fixed rates and whatnot. So, first things first, GDP came in with some surprising growth, but still showing a lot of weakness. That's Q3 GDP. Now, what caused the GDP to have some growth? We're looking at oil was a big one, imports was a big one, so trade, and also government spending. So, not exactly great things. And if you look under the hood a little bit, you will see that because of the US government shutdown, we actually did not get accurate trade data. So there could be a revision on GDP based off of data if we ever get any data from the government shutdown period from the US on trade, which I wouldn't hold my breath for that. But also, if you look at October's GDP, they're already showing a contraction of 0.3%. So even though we did have some growth in Q3, it's not sustaining throughout the rest of the year. So Canada's economy still struggling a lot. Now getting to the bigger issue, Japanese bond yields have been going up. They've been going up because of that stimulus package that they've announced. So markets are betting that there's going to be rate hikes by the Bank of Japan. And if you followed me in the past, you would know that there's a carry trade that goes on between American investors and Japanese banks because of low interest rates out there. So any leverage investing is now going to have some problems. And we're starting to see that already. It's probably the main reason why you're seeing Bitcoin drop significantly, because a lot of leverage investing goes into Bitcoin and the values are going down, probably because people have to liquidate positions in anticipation of some issues with the carry trade differences there. Also, we're going to see this in our yields, which is why our yields have been struggling to go, even with the bad economic data we get, whether it's jobs or GDP, our yields are still struggling to go down. In fact, they're popping up a little bit today because they're anticipating these issues. The bond traders are anticipating issues with Japan. They're anticipating rate hikes with the Bank of Japan. They're anticipating leverage trading to be a bit of an issue. So they're seeing, of course, inflation issues. But also, as Japan's yields go up, they're going to pull money out of other markets because people are going to see an opportunity to invest in Japan. So they might be selling bonds from other countries. Bonds work the opposite of stocks. If you're selling a Canadian bond, there's lots of selling of Canadian bonds. Canadian bond prices actually go up versus stocks. If you sell a lot of stock, those prices go down. So there's a lot of bond traders preparing for this kind of thing. So that's why I mentioned, I think it was 2-3 weeks ago, we got to keep an eye on Japan.